Oh, it's hot, baby, hot. Woo, hot fire.
Okay, so I'm back. Yeah, what I'll do is what you need to do, which I was figuring I was going to do that.
You know what it is. You know who it is. It's the Sizzle, baby, here on Sizzle Radio and Sizzle Television. It's the Sizzle here on Iron Skillet Sports. We're here to give you the best information, the best talk of the 219, all the talk of the 219. First, you know how it is. I got to say what's up to my man, Jay Sizzle. What's going on, Jay?
Man, I'm in day 782 of the COVID containment, man. But I finally got my stimulus check, man. So look, I am sitting here. It's burned a hole in my pocket, baby. Look, I'm on QVC, JVC, whatever C we can be on. I want to buy something. Somebody's got to help me. Tell me what to do with my stimulus check.
So you got the money. You ready? You ready?
Oh, man.
Can I borrow $1 at least from you?
I want interest, though, bro.
boy, you play hard. This called Trump taxes you hitting with, boy. You want your money. Okay, well, okay. I'll give you 50 cents on it. How about that? If you let me borrow $1 today, I'll pay you back at least next Tuesday.
We're going to talk about it to a professional who's going to tell me, because I think I'm getting hoodwinked.
You are. Don't worry about it. Don't worry about it. It's nothing big. You won't. You don't have to worry about it. Listen, you know what it is. It's the Hot Money segment, and you know who we're with, the beautiful Cimone Casson, and she is here to tell us about what to do with our money. Because now that I've got $1 extra from Jay, and he's going to let me borrow this $1, now I got to figure out what I'm going to do with it. So let's get right into it. First question up. Our listeners from our last show really wanted some questions answered from Cimone. So let's ask this really quickly. If it's a recession, number one, are we in a recession?
All right. Well, great question. And again, you guys, thanks so much for having me. So we are not determined. We're not in a definite recession right now. And so we got to be clear on what a recession is. A recession is 2 quarters consecutively, right? Meaning together that are of economic decline. And that's not what we have, right? So we haven't even really necessarily seen a whole full quarter of an economic decline as of right now. Just as lately as February, we were still in great shape. The stock market was doing really, really well. Employees were doing really, really well. Employment rate. And so this has only been recent. So we need at least 2 quarters, meaning 6 months or more, right? So it would be the next quarter, which we're in now, April, May, June, and then it would be the quarter after that, July, August, September. If that went in, then after that, then we can define ourselves as being in a recession. How do we measure that? We measure it. One of the biggest things is definitely going to be what we consider GDP, which is gross domestic products. And so that is the finished product that every country puts out at a specific time. So I'll give you a prime example. Although we know Volkswagen is a German car, its GDP is given to China. Why? Because China puts it together and is the one that actually puts it out. So it's that last place where a product or a service is actually finished and then given out. Right. And so when that declines consecutively, then we use that information so that we can measure the economic growth of a country. So no, we can't define that as of yet. Right.
Okay.
All right. Let's keep going. What else?
First thing out there.
Yeah. First thing
we're sure that we're not in a recession.
We have not hit recession yet. So we would need for it to be consecutive. What that's going to look like, I mean, will labor and unemployment still continuously be down? Will services and productivity still be down? Will inflation be and we were deflating, and the power of the dollar? All of those things are going to add to us being in a recession. We haven't we y'all only know this only been going on for 30 days. Right. So we're talking about 30 days in comparison to what we're actually looking at to be determined as a recession would have to be 6 months. Now, let me say this. That doesn't mean that it's not going to happen. We see a lot.
What Cimone was saying was really interesting right there, talking about when do we use a benchmark? What is it going to be when a recession kicks in? You know what I'm saying? And for most of us, we're sitting here right now wondering what is going on? What is happening with this economy? Is there a point in time where our economy is going to be damaged to the point where we get to a point of no return? And we get an opportunity here, we could talk about that, is what's going to happen when businesses who are cash driven, what are they going to do at some point in time? I think that's what we're really seeing right now, is this soft opening that a lot of states are trying to put on right now, is that we are in such a predicament that we see the water coming up. You know what I'm saying? We see the water coming up, but we're getting up on top of the roof right now. And at some point in time, we're looking at, is all the water gone from the lake? Is all the water gone? Because we're looking at it from a standpoint that is that tsunami going to come in, an economic tsunami going to come in and really wipe out what we have? And I know I want to just get back to Cimone and ask her, Cimone, where is the watermark? Where's the level that you're looking at right now? You say, okay, hey, this economy is really in trouble. If we hit it, say we do go into a recession, we're going into 2 of those quarters back to back. Is there a place in there where we really need to be worried about, where we're seeing the country can't recover, and as we know, as it is, life as we know it, is it going to still be the same, or are we looking at a big change somewhere down the line?
Well, I would probably say no matter what, we can't be under the illusion that somebody's going to push a button and we're going to go back to this same place where we were. We're definitely going to be experiencing some new normals, and that's going to look like a host of different things. Not necessarily, and it may not even just be financially, but we're looking at some new normals. So let's look at some things that we're definitely going to see. We definitely will see an influx of probably the welcoming of cryptocurrency. The reason why we're going to look at cryptocurrency is because it's safer. So before, if you go to a store right now, you can't even do debit and get money back. You can't get cash back. Well, know why? Because cash is the most filthiest thing in the world. I don't care what gas station you go to in a bathroom. It is going to be cleaner and have less bacteria than money. So money is going to become, actually, the dollar will actually become more obsolete. And we see that with Apple Pay and a host of other things. But as we start to globally shrink, having forms of cryptocurrency are going to be very, very vital to us. One, because it's less contact. It's going to be a safer way for us to actually, practice safe social distance, and it'll probably become a part of our new normal. A lot of other places have accepted it. Why haven't we accepted it so far? Is because the basis of money and currency as it is based on the fact that you accept it as a payment. And so we just have not come on board with that, but other countries have. So that will be part of our new normals. Another part of our new normals will also be us spending more time at home. Although you got to remember that behaviors change after 30 days. And so although we are having cabin fever and a bunch of other things, I would probably assure you that there will be more home theaters, right? There will be more people doing things at home. I don't know if y'all know this or not, but we are watching the demise of Comcast right now. Trust me, you got parents at home who have been looking at Comcast, and especially the ones that's got kids, and they looking at their refrigerator, they looking at their television saying, I'm cutting this stuff off. right? If we didn't have corona and people were not at home, they wouldn't have realized how useless it is with all of the live streaming outlets that we have. So we'll see new things with that. What else will we see? We will continue to see more and more opportunities of people being able to work from home. Guess what? If more and more people are working from home, that means that's less electricity. That means that that's less gas, water, and a host of other things that companies are spending. So spending will look a lot different. And then, of course, our lives as a whole will be different. And we see that. So what social connection will be a lot different. And we'll talk about how those are going to be things that help you choose stocks in the future.
Okay. So we have questions, and we have people who've asked questions from the last time you were on, and our listeners wanted to know one thing specifically.
What's that?
Is how do I invest the money that I get from a stimulus check? What do I do with that money?
Okay, cool. Well, that's a wonderful, wonderful question. So right now we have a unique opportunity. Never historically has the powers that be, the government, ever come in and actually bailed out the citizens. The last time they made a promise like this, it was called 40 acres and a mule, and ain't none of us get it. Right?
That's
They
right.
I
never,
still
they have
haven't got
never
mine
done
yet.
this before. We've seen them actually bail out industries. We've seen them actually bail out markets, but they have never stimulated citizens except for when they lied to us. Right. And so, with this opportunity, with states offering unemployment, with us being able to have this additional stimulus check, we have a very, very great opportunity. And although it's small, we do have an opportunity because this is probably the first time that a lot of geniuses, I believe everybody has a purpose. And there's a lot of geniuses that have great ideas and they've been missing two things: time and money. Well,
Yeah.
guess what? Doggone it, you got both of them. You ain't got much, but you got both of them. You got
Right.
time to be able to sit at home and think things totally through. And then you also have God and Google, who is my favorite two people in life, right? So what does this mean? So what does this mean for us, right? What are
Right.
we doing with it? So $1,000 is not a whole lot of money, but it is enough money for you to be able to plant a seed and watch it grow.
Okay.
All right.
Right.
So let's talk about the first thing that you should do. First thing that you should do is, if you got that $1,000, even though we have the CARE Act, y'all got to understand the CARE Act is the act that is delaying your bills or your payments, and it is over October 1, right? So if you have debt, if your debt and your interest payment is higher than 8%, you need to pay that debt. And the reason being because there is no safe investment that's going to pay you more than 8%. So you would be better off knocking off the interest from the debt than being able to actually put money someplace else. Does that make sense? So
Yeah.
pay off any debt that you have. So right now you have your current bills that are delayed, but your past bills, your past due bills are still going to be there. Those past due responsibilities. So if you can do that, and then also just understand that most of the companies are offering either 60 days, meaning 2 months since the day that you called and let them know that you're not going to be being able to pay, and then everything is due plus interest on October 1st, and that's in the CARE Act. They ain't got to give you nothing else after October 1st. Ain't no,
Wow.
I'm gonna pay later. It's over. Cool.
Cool.
Simone,
All right.
what's really interesting about that is a lot of people, our listeners, don't know that. They don't know that they're thinking right now they're going to get a free ride, because I've heard of some people not paying their rent, have the money to pay the rent and not paying it, think somehow the government's going to say, hey, that's okay. We're just going to hit the reset button. Don't worry about that last 3 months of rent. It's on the government. Don't worry about it. A lot of people don't realize that these debts are going to accrue over a period of time, and they are going to come due. That was a great point you put out.
Yeah, and so this is the plan as it is right now. They are still rolling out new stuff, and you still have to. And I tell you guys all the time, there are two streets: it's Main Street and Wall Street. They're the only two streets that matter. So make sure that you talk to whether it's your aldermen, your state representatives, your city council, everybody. You want to make sure that your voice is getting heard and that the needs that you have are being met. Right?
Wow, that that is so amazing.
I tell people all the time where power, politics, and money is met,
Mhm.
that's where deals are made. That's where I want to sit.
Okay, now
All right.
that
Number
now
two.
Okay.
okay, number two.
All right. So number two is we have to understand that investing is a privilege. It is not a right. Okay.
Okay.
So everybody cannot participate in investing. And the reason being is if you don't have enough of a savings account to be able to deal with emergencies, then you cannot invest. And investing is risky. The worst thing that you want to do is make an emotional decision because you can't afford to lose the money or because you need the money at the wrong time. So if you have $1,000, right? And that's
Mhm.
all that you have, but your car breaks down and it's $800, guess where you're gonna have to go? You have to go to
Yeah.
the most liquid place, either your bank account, which we already said don't have no money in it. Then that means that you're gonna have to go to your stocks. And in a lot of cases, especially in this market, those stock prices are going to go down even lower. So you probably would end up selling $1,000 worth of shares at $800 just so that you can get your car fixed. So the first
Wow.
thing that you want to do is put the money in a savings account if you don't
So
have a savings.
so if you don't have a savings, you need a
Mhm.
savings account immediately. That's what you got to
Immediately.
do.
And that should it consist of either 6 months of your expenses or 6 months of your income, whichever one is greater.
Mm, okay. So 6 months of expenses or
Mhm.
6 months of whatever your
Income is.
income is. Okay. Okay.
Yeah. Okay. All
And that's what should be
right.
sitting in
So
your savings account.
yeah, that should be sitting there hiding out because just think about times like this.
Hmm.
Right now, there are a lot of individuals, especially contractors, like gig contractors that are barbers, salons. We saw in
Hmm.
Georgia. Although we know that getting your hair cut and your hair done is the most intimate relationship you're gonna have outside of your partner,
Well,
right?
Right.
This is the
well, well,
worst place to
Look.
be
well,
open,
speak for
right?
yourself now
But
here, because
these people actually need money.
Yeah, okay. You can do
Right,
that,
but
Jay
these people
Sizzle. Look at
actually need
this.
money. So definitely having 6 months available is awesome. And then there are a lot of individuals who have families or who even have had illnesses, but they are deemed as essential workers. And so they can't get unemployment or whatever because these companies are still there in an inception. And then even going back, these states that are sending that are opening back up, guess what that means? You know what that means? You can't stay at home. So if I
yeah.
have a major company in Georgia, you
Mhm.
come back or you're done. That's it. There's no options. So having that money gives you options, right? It gives you options. You get a chance to say, hey, you know what? My family is more important. But the other option that you do have is making sure that you reach out to your state representative and make sure that unions talk and get together and say, hey, we're not going back and y'all need to figure something out.
Okay. All right. So what's our next step? Because I know you were getting ready to go to your next step. What's the step after
Yep.
that? So this is step
So
three.
the So this is step three. So if you have gotten all of your eggs in a basket and you're ready to actually participate and put your money where your mouth is, then
Mhm.
you can definitely be able to invest in a couple of different opportunities. The first one, of course, we're going to look at you can invest in stocks. Why do we say stocks? Because stocks are become very, very easily accessible to us. Those stocks, because they're becoming so easily accessible to us, we can do it right on our phone. The market is down, which means that things are on sale. Understand, $100 stock, $100 company will still be $100 company after the smoke clears. This just is what we consider a market catalyst that is making the stock market go down. So if you have never invested before and you've
Mhm.
never participated, there's a couple things that you got to do. First, you need to do your due diligence on a company, meaning that you need to research and understand what the company is and what they do and how their business model is. The other thing is that you also want to manage your risk. You need to understand your risk appetite. How much are you willing? How much can you comfortably deal with the volatility? And how much can you lose? This game is not all about winners. And then last but not least, making sure that you actually employ a strategy or a plan for you to be able to win. There is no money making tool that does not require a strategy. So, if you are looking to buy your first stock, which I hear this all the time, this is my most frequently asked question.
Mhm.
Cimone, what stock should I buy? I can't answer that for you. And nobody else can. But let me tell you what you should do. You
Okay.
should put your money where your mouth is, meaning
Mhm.
that you should buy into companies that you are invest in companies that you already buy.
That's
We
good.
got a new normal. So guess what? I can tell right now, you handsome gentlemen, your wives probably got a bunch of honey-do lists that's going on. That you should have been fixing something, you should have been raking something or doing whatever. Well, you know what? If you've been going to Home Depot every day, that's a wonderful company for you to go into. And guess what?
Mm.
They offer dividends.
Yeah.
If you have been buying up all of that toilet paper, guess
Mhm.
what? It is earnings season, and Cottonelle is owned by Kimberly Clark. This is a wonderful time for you to look at. Kimberly Clark also owns Kleenex and a host of other things. So that's a great opportunity. If you have been Netflixing and chilling, then you need to keep on Netflixing and chilling. That's a great opportunity for you to be able to buy into those companies. If you have been live streaming, whether it's GoToMeeting, whether it's Workplace, or even Zoom, all of those are publicly traded companies. What I'm trying to explain to you is that the first company that you purchase, you should always understand the business model, but also you should buy companies that you like, love, and trust. So when the market goes up and down and you lose a little bit of money, you're not so quick to sell because you have a relationship with this company. And then last but not least, every time you pay your bill, guess what? You pay yourself.
Hmm.
That's why I like Cimone, man. She makes it all make me feel much better about what's going on, what the situation is. Tell me what to
Yeah.
do. Cause
I do not care.
I had that 65-inch TV all lined up, but I said, well, now I'm not gonna do that. I'm gonna take Simone's advice and I'm gonna go figure out and go do some research. And you know
Mhm.
what? I'm gonna go buy me some stock because that's the thing to do.
Yeah, and make sure you do your research. So when if Walmart is your thing, that's great, but then definitely go in and do your research. Right now, this is a cool time because we are in earnings season. And if you don't know what earnings season, this is when companies report what their earnings were from the first quarter. So what they made, the revenue that they made from January, February, and March. So even though a company may be down on the market, their earnings report is going to let you know if they're doing well. So pretty much you can say, okay, I bought these on sale. The market is down, meaning that the market as a whole is down, but the company, again, $100 company will still be $100 company after all the smoke clears.
Simone, you're talking about doing some research. How is a
Yeah.
person who's never really researched the stock before? How do they do? Do they go to Google Finance, Yahoo? How do they find out some information? How do they do that?
Well, like I said, y'all know my two favorite people in the world are God and Google, right?
Yeah, yeah.
And so God and Google makes everything accessible to us. So first thing after you determine what company that you want and understand there are riches in niches. If you are a beginner or if you're adding to your portfolio, don't I had somebody on one of my lives tell me about some company who makes guns in Iran. I'm not buying that. It's
Mhm.
630,000 companies globally traded, right? So
Mhm.
I'm not buying that because I don't know what that is. And for me to actually research that would be mind numbing.
Yeah.
But you can go in and you can find companies that you like, love, and trust. And once you Google them and you put in their stock, there's a little icon on the top that says follow them. And they will give you information about this company every time there's something written about them. In addition to that, you can also go to Yahoo Finance. There are tons and tons of different sites that you can go on. And you can take my courses so I can show you and give you a whole bunch of information and collateral on where you can find them. But it is totally accessible to you, definitely with Google. And then in addition addition to that, most of your trading platforms, especially Robinhood, which is one that I do like, they will give you information about the market and information about your particular stocks that are on your watch list or that you're holding.
Okay. So it's funny because we jumped into it and
Mm-hmm.
we're talking about what you buy is where you should invest. So if
Mm-hmm.
there's a company that you consistently use and you're using them and you're going to them making purchases, this is a company that you should be setting your Google searches to, and this is a company that you should be buying.
Yes.
So how much stock do you start buying? How do you get into buying stock from a large company, let's say like Kimberly Clark? How do you start investing your money
Mm-hmm.
into buying stock from that company?
So first thing is how I think you said how much.
Mhm.
That has to be determined by you. As I said before, you have to create your determine your own risk appetite. What is that going to mean? One, how much volatility can your risk tolerance? How much volatility can you deal with? If a company is very, very volatile, and volatility usually goes in clusters. So if a company's stock is going up and down, and you don't like that, that
Mhm.
ain't the company that you want to be in. You want to look at, and it's a newer company or a smaller company, you probably want to look at more stronger companies that possibly may offer a dividend, right? So we call those blue stock, blue chips or whatever. Those are going to be really, really strong companies. They're not going to give you a whole lot of volatility, but they probably won't give you as much appreciation. But
Simone,
it means where
Simone,
you want. Mhm.
when you're saying volatility, is that something to do with the fear index? Is that something it just shows if the volatility is high? Does that mean that the
Oh,
market's moving a
volatility
lot? Yeah,
means sure. Volatility means volatile, up and down.
yeah.
So if you buy a stock at $10,
Okay.
now you might say, okay, so listen, check this out. So I buy a stock at $10. Now I look at that stock and I say, you know what? I'm hoping that it goes to 15. But if this stock goes to $9.50, I'm gonna be pissed. If it goes to $9, I'm gonna be real angry. And if it gets to $8, I'm gonna lose my mind. You have to
Mhm.
put in a stop at that point because that no longer meets your risk tolerance, right?
Okay.
You can't tolerate that. Money should not make you throw up. It should make you
Mhm.
feel good, right? So if you're in a situation where you're seeing a company that constantly moves up and down and up and down and up and down, then that company may not meet your risk tolerance. If it's a smaller company that is trading at a very, very low, that might not meet your risk tolerance. Because understand this, a $50 company and a
Mhm.
$5 company, when both of them hit zero, you done lost all your money.
Yeah.
But it takes the $50 company a whole lot longer to hit zero than the $5 one does.
Yeah.
Okay.
So that's how you have to be able to determine what your risk tolerance is.
Okay.
In addition to that, what else are we looking at? We're looking at how much can you invest? How much can you invest? You know what that means? How much can you lose? Because
Right.
see, this whole thing can all go to hell in a high basket for us, and you have to understand your risk. So, risk management is all about understanding how much volatility you can use up and down, and how much that you can actually lose. And you gotta understand there is a risk and reward ratio. The
Mhm.
more you risk, the higher the possibility for the reward, and vice versa.
I like how you smile when you talk about that reward side,
It
Simone.
makes me feel look. I think
Makes
I'm
you feel all
probably
warm
one of the
inside.
few.
I
Yeah, I think
understand.
I'm probably one of the few black women that'll get up at 4 o'clock in the morning and watch the Chinese market, and I get goosebumps.
You do. You do. You're up
Hey,
early. You're an early riser. But we're
Yes,
getting ready to get out of here and close this segment. But
okay.
before we go, we've got
Mhm.
to ask you, what are your tips, your hot money tips to leave with the listeners from what we've heard today?
Okay, cool. Well, of course, like I said, I probably the number one tip that there's two things that I would probably want to tell everybody. First thing is buy what you know. That's the first thing. That's the biggest thing. And the reason why is even more so as we approach this new normal, the things that you are utilizing every day will be the things that will be a part of your future. The things that you weren't utilizing every day, I tell everybody my grandmother used to have Mr. Quick put in your milk when I was a kid.
Right.
Oh yeah.
And I thought I couldn't live without it as a kid. I ain't seen Mr. Quick in a powder form and God knows how long. So you have to adapt to things that are your new normal. What are going to be your new number? That's what you're going to purchase. And then last but not least, one of the things that I think people have to really, really understand is you do not have to invest all of your money at one time. Mm-hmm. So if you have $1,000, you want to take $1,000 of your stimulus check, you can actually dip your toe in and start off with a third, right? Start off with a third in a company that allows you to see if this company, it's probably going to dip down a little bit more, but you're not totally invested at a very, very low price. And you're not losing so much money. You can be able to wait a few months or whatever, see how the economy is doing, and then invest another third. And then, of course, so on and so on. You can utilize this strategy whether or not you are trading for income, meaning that you're actively trading, or if you're investing for the long term.
I like that. You know what? Next time, we've really got to talk about trading for income and trading for the long term. What's the long play on the money?
So that's the long play. Right. And so that's the long-term investment. So we can talk about that. We'll talk about it next month.
This is good. This is amazing.
Y'all are terrible. I don't know. What am I going to do with y'all?
Girl, we're going to help us make some money.
Right?
You gonna get some money, we gonna get some money, they gonna get some money. That's right. Everybody, it's like Oprah now. You get some money, you get some money, y'all get some money. We're all getting money here. I mean, this is amazing. And I think I hope the listeners really can appreciate the time you've invested to do the research and to share your time with us to give people some direction and guidance on which way they should be going, and especially what they should be doing with this money. So before we get out of here, we've got to find out what your info is so people can reach you and get information on your courses and classes.
Exactly. So, of course, my website is www.ccimonecasson.com. And you can go to our library. You can hit subscribe, and we have exclusive videos that are there that you can subscribe and rent. And then, of course, we have a 6-session course that will teach you how to trade and invest that you can get off on, that you can get on the website. And then, of course, you can follow me everywhere, whether it's YouTube, Facebook, Instagram, Twitter, Christian Mingle, Tinder, wherever you want to find me. It is CIMoneCasson.com. They can find me anywhere, right? I ain't hiding.
You know, Cimone, we're gonna have to get you your own TV show.
Yes.
Yes.
Yeah, we're going to promote it. We're gonna put it on Iron Skillet TV. Yes, we're gonna produce your show. Because this is gold.
Threaten me with a problem. Don't threaten me with no good time.
Oh, I keep telling you, you'll get one.